Hey everybody, Jake here with TrendSpider to go over another round of charts tonight. What I first want to do is go over the chart that I went over last night, which was the SPY chart with the anchored volume by price and anchored volume weighted average price from the February 19th high. So, going into the daily candle, what we can see here is essentially we found resistance right where we found resistance yesterday, except instead of opening at resistance, the supply zone, we actually closed right at the supply zone. So this is important for a few different reasons. One, if you look, this was actually only the second time that we've closed above this February 19th anchored volume weighted average price. And that's significant because the February 19th high and kind of reversal candle here was really when the status quo changed in the market. This was really the peaking point before we completely rolled over. So this is why I have been really looking at the February 19th candle, not only on SPY, but other charts as well, because this is really when the status quo changed in the market. So one, we do have that closed above the Alphatrends Anchored VWAP for the second time since this was started. So we had a close on March 4th. We have a close today. So we'll have to see if the price can actually finally get through this supply zone, because if it does get through this supply zone, which is essentially just people holding at this price, and remember, as the price starts to get into this supply zone, people who are now breaking even from holding way back in the 220s and 230s, they're like, all right, I'm getting out of here. And then that allows for, people to come in and outpace that supply. Just because we're entering a supply zone doesn't mean that this is going to be resistance. If demand starts to really ramp up and starts to outpace any supply that starts to kind of come on the market here, then we'll continue up. So that is something I want to mention, as well as the volume gap. Notice how freely and quickly the price has been able to move through this gap in volume. So essentially it's just telling us there wasn't a lot of friction in this area for the price to kind of move. So it was able to move very quickly and freely through this overall zone. So that is SPY. We'll go onto the Qs and we'll see something relatively similar. The only difference here is we've actually closed multiple times above the Alphatrends Anchored VWAP from this February 19th point. For some reason, it did not anchor at the right point. So what we want to do here is we want to anchor from this point. Remember, this is that February 19th candle. So right click, create Alphatrends Anchored VWAP, and all of a sudden we've got this area that has clearly acted as support now 2 days in a row. We're kind of fighting through this supply zone, which is a little ahead of schedule compared to SPY, which is still kind of trying to fight through this supply zone, but we're pretty much already there on the Qs. And so if the price did continue up, notice that there's not a lot of supply above until you get to this big block of supply around, let's say, 215 or so. So, can the price just blast right through this area, which I would call kind of a gap in volume? Sure, but it doesn't mean that the price is going to go from 201 to 215 in one day. It just tells us that there's not as much supply above as there is, around the current price we're at. There's less shares holding above until we get to this 215 level. And remember, anyone who's holding from 215 may all of a sudden say, all right, I'm getting out once we get back to 215, because they've been holding through this whole mess and they just want to break even. So we're kind of getting to a point in the market where things are stabilizing a little bit. A lot of expectations are starting to, not be hit. So for example, oil is another great example of this going into USO. A lot of people aren't expecting much into this, this OPEC meeting. And so that sets the stage immediately for some type of rally if anything positive comes out of this. So notice what we've got here. We've got the same type of deal. In this case, I actually anchored the volume weighted average price and the volume by price from February 20th, because notice we actually reversed a day later than we did on SPY and the Qs. So I, just did an extra day here, and so I anchored it from this reversal point instead. And what you'll see is, as we tried to bounce, as we initially moved down, this was an area of resistance. Notice we continue down, we finally spike back up, and this area is once again resistance. Now notice that the price did not get exactly to this line. that's where you can easily go in and increase or decrease your sensitivity so you're able to capture those wicks that don't necessarily close above or at the line. Increasing your sensitivity allows you to capture within X amount of dollars within this line. In this case, as I move this over, notice that the alert's going to fire within 26 cents of the line, and you'll see how much more price action we're able to capture with this purple zone. So same thing happened today on the downside. Notice that we anchored the VWAP from this bottom on March 30th. We bounced off of this anchored VWAP 2 times in the last day. And also notice something interesting is the confluence between this anchored VWAP and all of the volume holding from this particular point on February 20th. Notice that a majority of the people are holding within, $4.75 to $5. As the price drops, anybody who was holding at a profit from this general area stops selling. Supply starts to outpace demand, and you've got what we've got here, a nice bounce up. This, classically happened right with news, as it always does. So it'll be interesting to see if this bull flag breaks out and retests this upper zone above. Let's say that I don't have the full day to watch what's going to happen tomorrow, and I don't have time to watch USO tick by tick. I can just create an alert at this line, and I'll say anytime that the 10-minute candle closes anywhere within this purple zone that I've highlighted, I will be alerted. And so within 5 days, if the price action on the 10-minute candle closes in this purple area, I'll be alerted and I'll know, maybe it's time to look at either selling the position I have or maybe going longer. I personally am not in a USO position, but what I've done is I've actually entered CHK. And for all of those that are laughing right now because I just mentioned CHK, a company that's probably going to go bankrupt at some point. Who knows, maybe not. I'm actually playing CHK for a couple of reasons. One, I've been playing CHK since I started trading back in high school. So I think I did my first CHK trade when I was 17 years old. I understand the personality of the CHK kind of stock. I understand how the price moves. I watch the spread a lot, so I kind of feel comfortable trading this for a couple reasons. One, notice that this is lagging compared to other oil plays out there. And the obvious reason is most people think this is going to go bankrupt. But if we get a massive move in oil like it looks like we possibly could, notice what happens here on CHK. What we've done is we've anchored the volume by price from the September 16th, 2019 high. And what you'll notice is almost all of the volume that's been traded since that point in time, almost all of it is really, really centered right around the current price we're at. So notice how, this big volume bar is telling us that a majority of the people are holding here. So as supply and demand kind of equalize, if people stop selling and any type of short squeeze occurs in these oil stocks, this is one that may absolutely have an absolute rip. And I know I said absolute there like 10 times in a row, but that's the only way I can describe it. I'm not saying it's going to happen, but this is the stock that I personally am going to play for an oil move. Same thing on the daily. We've got this divergence. Divergence is one of the main things I look for, especially on the Williams percent range. Notice here that as the prices dropped since February 14th, we have not hit a lower, or we've had higher lows here on the Williams percent range as we were creating new lower lows on the price. And obviously we've bottomed out here, but notice that the percent range continues to find these higher lows. And we actually found a higher low as well over the last 2 days. So if this area, let's say, I like to use trend lines on lower indicators as well. If this area kind of breaks out this resistance zone, that would be something to look at for me, maybe for a continuation into next week. Notice, we have not broken out yet, but on the weekly chart, you can see that this divergence on the MACD versus the weekly price is pretty incredible. I mean, we've been finding lower lows here on price since December of 2018, but we've been finding higher lows on the MACD since that same time period. So it'll be interesting to see if this continues up. Obviously the market does what it wants. This does not have to materialize, but this is an example using the volume by price, using divergence, and just using kind of the whole platform in general. So that is an example that I wanted to go over. Moving on, I did want to go over Boeing. So BA, this is one that has kind of confused a lot of people. I've been following David Portnoy, I think that's how he says his name, the Barstool Sports president. I think his ticker is or his handle is @Stool Presidente. He's had some trouble trading this, and so if anyone watches this and wants to show him this video, please do. But essentially, we've got four main areas that we're looking at. We're looking at the anchored VWAP from February 12th, which was the high. Notice here, we did not top out on February 19th. The February 12th candle was essentially what we got on February 19th on SPY and the Qs. And so we've got this anchored VWAP to look at, which has acted as resistance 2 times now. We've got the anchored VWAP from March 18th, which was our bottom. Notice that this has kind of been not necessarily the most accurate support zone, which it doesn't always have to be. It's more of a level of interest most of the time. And then the next zone here is this big block of volume that's holding right around where we're trading at. So, if there's this much kind of supply and demand holding here, it's kind of a weird area because we're kind of trading right at it. Generally, if we're trading above the volume block, it's a demand zone. If we're trading below an area, let's say like this is a supply zone because the next time price gets there, people may want to exit that are breaking even. But this is, a general area that we've got really holding between the anchored VWAPs. We're holding right at this big point of control volume bar here, and we're trading very close to the apex of this symmetrical triangle. So, the price is going to have to break either to the upside or the downside. If I was to guess, I would say it's going to break to the upside because look at how many shares are holding down here. You can only have so many people selling. For all of those people that sold down here, there's new buyers that came in, and if those buyers are not going to sell anytime soon, it's going to dry up the supply. Demand's going to outpace supply, and you're going to get a breakout here. So, I have no idea what's going to happen with Boeing, but just looking at the supply and demand levels, it would be kind of hard for the price to break down through this area unless all of these people who are holding here start selling for a loss, and then that may create the next leg down. But the market just seems very strong right now. I know a lot of people are saying, oh, well, we just keep getting bad news, unemployment numbers, this, that. Well, the market priced in a lot of bad news when we started dropping. So kind of back to the USO example, I looked at an article on Google saying expectations are very low for oil to have some type of agreement with OPEC. Well, that sets the stage for people to buy simply because there's better news than there was expected. No different than people aren't going to sell SPY if news is already priced into whatever you're holding, whether that's SPY, whether that's the Qs. So that part of trading really has to be understood as well. Not just the technicals, not just the fundamentals, but understanding how expectations are priced into the market and knowing when they're priced in, knowing when they're not, and kind of being able to use the whole picture there rather than just using technicals, just using fundamentals. It's really a mix of everything. So hopefully this video helped. The main thing here was really to go over different examples of really using this anchored volume by price and anchored VWAP from this reversal point that we had. Obviously, some of these tickers have slightly different reversal points. That's why we changed this per chart. Notice BA, we topped out on February 12th. SPY, we topped out on February 19th. And so with the anchored volume profile, you're able to decide where you want to anchor that volume profile without actually having to scroll the chart at all. So that's something that's really unique about TrendSpider. It really allows you to localize those supply and demand zones. If you have any questions at all, please feel free to reach out on hello@trendspider.com or direct message on Twitter. We're happy to answer your questions there as well. And make sure to subscribe and comment below to get more videos like this coming soon. Thanks so much.